Advanced Micro Devices stock is tanking and is down almost 7% today and is now at a new 52-week low after reporting their earnings after the bell yesterday. AMD beat on their revenue estimates and met on their earnings per share. They're expected to report $1.09 in earnings per share, in which they met and reported that exact number. And for revenue, they were expected to report $7.53 billion in revenue and beat that, reporting $7.66 billion in revenue, which makes you wonder why the stock is down. However, they reported their data center revenue at $3.8 billion, which is almost a 70% growth year over year, which may seem good. However, analysts did expect this number to be $4.2 billion, which is why the stock is heading lower. So in this video, I'm going to determine if we should buy AMD stock after the recent pullback. And since it is at a 52-week low, is it a good buying opportunity? We're going to determine if this company is worthy of buying and seeing what price we should buy it at, using my 7-step stock analysis. The first metric that I'm going to be looking at for AMD is the PE ratio. The PE ratio is the price of the stock divided by the earnings per share. We want this value to be greater than 0. If the value is greater than 0, that means the company makes money, and we want the company to be making profits. As we can see here, AMD has a trailing PE ratio of 105.75. This means that AMD is profitable, and that is a check mark. The next metric that I like to look at is the forward PE ratio. We want the forward PE ratio to be less than 30, so we can buy this company at a reasonable value. As we can see here, the forward PE ratio for AMD is 25.64, which is also another check mark. Now I look at the revenue growth of the company. I want the revenue growth of AMD to be growing at a greater than 5% rate. As we can see in this chart, AMD's revenue was pretty stagnant and actually decreasing all the way up till 2016. Ever since 2016, AMD has been rapidly increasing their revenue. So far this looks like a pretty good checkmark for AMD, especially if they can sustain this growth. The next metric that I like to look at is the earnings per share growth. This is basically the profit of the company, and we want this to be growing at a greater than 5% rate. As we can see here, AMD had negative earnings per share all the way up until about 2017. This means that AMD was actually losing money every year. From 2018 to 2025, they have been positive. However, the earnings per share growth rate for AMD looks pretty all over the place. As we can see, it had a huge increase in 2021. From 2021 all the way to 2023, it decreased to about a negative earnings per share. This is not good, but luckily they are turning it around and have been increasing. I'm going to give this metric an X. Because of the crazy variability in the earnings per share, I am not very comfortable with these type of companies. I like to see a very nice steady increase in earnings per share. Now I'm going to look at the shares outstanding, one of the most overlooked parts of companies. The shares outstanding is basically the amount of shares that are available for everybody to purchase. So if this goes up, that means there's more shares available and your shares will become less valuable. So we want the shares to be decreasing over time. However, in this chart, we can see it has been basically increasing every year. So this is an X, and that's not very good for us. They're diluting us shareholders, meaning we'll own less of the company over time, even if we kept our shares stable. Now I want to look at the total debt divided by the equity. We want this less than 1, or 100%. So we want the company to have a lot more equity than their debt. If it is greater than 1, that means the company has more debt than their equity. As we can see here, AMD looks incredible in this aspect. They have a 3.93%, and we want this to be less than 100%. This means they have almost 30 times more equity than their debt. So this looks very good, and it's pretty unlikely for AMD to go bankrupt. The final metric that I like to look at is the expected growth rates of the company. So we want AMD to be expected to grow at a greater than 5% rate. As we can see here, compared to the S&P 500, AMD is expected to grow at a 50% rate next quarter, and in the next year, they're expected to grow at a 34% rate. So this is greater than our 5% that we want, so this is also another check mark, and shows that the company will probably grow pretty fast in the future. This also means that we should probably pay more for the company. Now the most important thing we have to do for AMD. To determine if we should buy AMD stock today, I'm going to use an intrinsic value calculator where I'm going to put in estimates for the next 10 years to determine if we should buy AMD. The first thing that we must do is put a revenue growth rate. I'm going to put a revenue growth rate of about 25%. Analysts expect it to grow at about a 30 to 35% rate in the next year. And also, I looked at the revenue growth rate expected for the next 5 years, and they show about a 25%. So I'm going to leave it at 25%. The net profit margin, I'm going to leave this at 8%. Right now, their net profit margin is around 7.5. However, I do think this could become higher, but I'm going to leave it here for now just because to be a little safe. The cash conversion we can leave at 100%, and the terminal PE ratio is the price divided by the earnings. The average of the S&P 500 is about 20. So since this is expected to grow a lot faster than the S&P 500, I'm going to put it at a 25 to give it a greater premium. Finally, the discount rate I'm going to leave at 12%. Because we want a slight margin of safety with the company, and since you can get about a 9 to 10% return in the S&P 500, we should have this a bit greater since we are putting on more risk buying an individual company. As we can see here, AMD's fair value price is about $118 per share, and as of today, it's at $111. So if you expect these estimates to be correct in the next 10 years, it looks like a pretty good buy. And if you bought it today, you'd probably make about a 13% year over year return. So thank you guys for watching this video on AMD.